Hey, how's it going? For the month of September, in the United States, the Fed has decided to decrease the interest rates by 0.5%. Now, how is that going to change your ability to buy a house? And is now the best time to buy a house? Well, to be completely honest with you, I don't know. I don't know who you are. I don't know what your finances are. I don't know how much money you make. I don't know your credit score. I don't know your debts. I don't know nothing about you. For all I know, you could not even live in the United States. I can't answer that question for you. However, the one thing I can do is give you some type of idea by taking a step back and seeing how just by the interest rates decreasing from the Fed is going to influence the mortgage interest rates and how that could potentially increase your buying power for a house. Okay. But even with that alone, that doesn't really change much because that just changes one piece of the puzzle. Okay. Now, before I go into that huge Pandora's box with interest rates, home prices, and everything, let's just take a look at the interest rates for mortgages at least. So, what I have here is I'm using Optimal Blue, and Optimal Blue is basically a website where you can have an idea what the current interest rates are. Okay. So, as we can see here, if we look all the way back in October, interest rates are around that 7.5% mark. Okay. Now, if we look coming into the beginning of October or the end of September, interest rates are around 5.82%, which is a huge decrease. That is almost a 1.7% decrease. And if we go ahead and try to compare that by percentage, that is actually around a 22% decrease in terms of the interest rate. That is absolutely huge. So, as you can see here, starting in January, we have been kind of hovering around that 6.5% interest rate mark. And we have been hovering around that mark all the way since August. Okay. So we've basically been going up and down, up and down, up and down for 8 months. Okay. Now, just until August, interest rates have been decreasing quite considerably. As you can see here, we literally went from the end of July at 6.6%, and we went all the way down to right now at basically 5.82% at the end of September. So, what ended up happening there? Let's just say we were at a 7% interest rate. Now, if we had a loan amount of $240,000, our monthly payment's going to be around $1,600. Now, what happens if we decrease that interest rate by 1%? Okay. So, what we're going to go ahead and do is we're going to drop that down to a 6%. Okay. So, instead of being at $1,600, we are sitting around $1,440. So, that is a total difference of $160 difference just by that 1% change. Now, there's multiple things you can do. You can either take it for what it is, take that payment for that loan amounts, and then you can buy a house with it. Okay. Now, another option you can do is if you want to go ahead and match that previous monthly payments of $1,600, how much would that change in terms of your loan amounts? Well, if we go ahead and just literally play with the numbers, we are looking at around a $26,000 increase from that original $240,000. So, what does this really end up doing? If you are comfortable with only a principal interest payment of $1,600, if interest rates dropped by 1 whole percent, basically, if you wanted that same payments, you could actually just increase your potential buying power by around $26,000. However, I wish it was that simple because look, real estate is something that is super, super lucrative because there's a whole bunch of things that change the markets. Because not only do you have all these external factors when it comes to speculating in the markets, you also have local markets which are completely dependent on the particular region and location. Because you could literally have one city where everyone's moving out and home prices are falling to the floor, and you have another city where everyone is moving into the city because let's just say that there's a new employer there hiring a lot of people. Okay. So, first of all, real estate is hyper dependent on the particular location where you're wanting to live at. Okay. Now, that's just one additional piece of the puzzle that you need to take into account when it comes to buying a house. So now that we know that interest rates decreasing increases your potential buying power, how is that really going to affect your ability to buy a house? In all actuality, I can't answer that question for you. The only person that can answer that question for you is basically a loan officer, basically taking a look into your finances and seeing what you qualify for a house. So maybe, perhaps previously, when you talk to a loan officer, you were only qualified to buy a $200,000 house. But now you can now qualify for a $230,000 house that you could buy. But now let's talk about when is the actual best time for you to buy a house. Well, once again, I don't know who you are. I don't know what your finances look like. I don't know anything about you if you're watching this video. However, I can give you some type of general idea on what would be circumstances that you could take into account when trying to optimize your ability to get the best bang for your buck. what are your desires? What are your goals? Like, what do you prioritize over buying a house? Because every single person is going to be different. You watching this video, you first need to decide what is the most important thing for you. Is it the monthly payment for the house? Is it the actual house? Where do you want this house to be located? What are the prices for the house that you want to buy in this particular location? So, the first thing that you need to do is you need to generate a list, basically trying to figure out what are the things that are most important for you when it comes to buying a house. Are you comfortable with the payments? Are you comfortable with what the house has? Are you comfortable with the location of the house? Is there grocery stores nearby? How's the school district? If you have kids, okay? There's a lot of things that you need to answer. So as soon as you can make that list and kind of decide what are your main priorities when it comes to buying a house, that gives you a very, very good foundation in trying to figure out what you would like when it comes to buying a house. You might think all those different things are completely different from interest rates because look, because at the end of the day, interest rates dropping by 1%, that's not going to jurisdict your ability to buy a house. You're going to have a whole list of other things that are going to influence your ability to buy a house. And how much you could borrow in terms of a loan amount is just one little aspect of the big picture of things. Okay. So the only real thing that you can do is just talk to a loan officer, figure out on how much you could buy, and then go back to that list of your priorities and try to see if you can make sure you can get as many things on that list as possible. Because look, this market is super dynamic. We have all these speculators trying to do the absolute best thing. I'm sorry to tell you this, but you're not going to be getting the best deal. There are a lot, and I mean a lot of things that people need to take into account when it comes to buying a house. And it is very, very easy to get overwhelmed with this whole entire process for buying a house. So the only real thing that you can do is talk to someone, talk to a lender, talk to a loan officer, talk to a realtor, look at your different options. Make sure when you get those options, you go back to that list that you wrote for your priorities and try to see if you are comfortable with your options and if they overlap with your priorities. Because at the end of the day, you're not going to be able to get everything that you want in the house. You are going to need to make sacrifices. Just because interest rates dropped and that increases your potential buying power doesn't mean that it is a good time for you to buy a house, because maybe you have kids in school and you don't want to take them out of school and ruin their education for a small period of time. Maybe your kid's education is more important than moving to a different house. Now, let's just say you are by yourself and you don't have any real responsibilities of other people, such as a potential spouse or kids. Well, you can much easily make that decision in terms of moving and getting what your preferences are compared to someone who has a family, okay? At the end of the day, interest rates changing from the Fed obviously is going to increase your potential buying power. However, there are a whole bunch of lists of things that you need to take into account when it comes to buying a house. And when it comes to the interest rates for home loans, that's just one part of the puzzle. The main takeaway that I can give you when it comes to buying a house is look, write down a list of all the things that you think are important when it comes to buying a house. Talk to people, collaborate with a loan officer, collaborate with a realtor, collaborate with your family, and just try to figure out what would be the best option for you to take. Because at the end of the day, you are the person that needs to pull the trigger and do the things that you think are best. There's a lot of stress in this world, and trust me, buying a house is definitely stressful, and you can only really deal with the cards you are dealt. That is all for today's video. I hope I gave you some insight on how the Fed changing their rates is going to be able to change your buying power. However, keep in mind, just because the Fed decreased their rates doesn't mean that your ability to buy a house is even better. So you need to take into account everything, figure out what is your best option, take it slow, don't stress, and just move forward. That is all I have for today's video. Thank you very much. If you could please do me a huge favor, like and subscribe, and have a great day. Thank you.